Good morning, students. Today we are going to start with chapter 2 of accounts, that is dual effect of transactions and types of accounts. Already it has been given in the textbook that we are going to refer meaning of business transaction, classification of business transactions, identification of cash and credit transaction, voucher, dual effect of transaction, types of account, rules of debit and credit of accounts, and steps of debiting, crediting of account. Already in the last chapter, we have discussed regarding the terminology and concepts of accounts, terms of accounts, and those terms are very important for this chapter. Before we go with the second point, first point, meaning of business transaction, already we have done it in the previous chapter, but same has been given again over here. So I'll repeat it, that the meaning of business transaction is the exchange of products, services of business for cash or on credit between two or more than two persons. So whenever there is exchange of either products or service of business between two or more than two persons, either it can be for cash or on credit, in accounts we call it as a transaction. Now there comes the second point, classification of business transaction. Let us see the classification of business transaction. Here, classification of business transaction. Business transaction is classified into two, economic transaction and non-economic transaction. Economic transaction is further classified into cash, credit transaction, other transaction. And it is also again can be classified into internal, external transaction. Thus, there are two types of economic transaction mainly. Either it can be cash credit transaction or it can be internal, external transaction. Again, now let us see first the meaning of economic transaction. Already we know the meaning of transaction. Now let us see the meaning of economic transaction. Those business transactions, the value of which can be measured in money form or cash, and where the exchange of money in cash is to be made immediately or in future, is called economic transaction. Two things are to be remembered. First, that in a transaction, the value of money is given, or it can be measured in form of money, or it is in form of cash, and exchange is done of money in cash immediately or in future. So first, for economic transaction, it is that those transactions, the value of which can be measured in money or cash, and second, where the exchange of money in cash is done immediately or in future. First important to be noted is that any value in any transaction, the value which is given is measured in terms of cash or money. And second, you are going to remember that this exchange of money is done immediately or in future. We call it as economic transaction. And these economic transactions, are always recorded in the books of accounts. In the books, if you find that it is economic transaction, then you are going to record it in the books of the business. Here now two aspects are to be remembered. Which are those two important aspects of economic transaction? First one, exchange of cash for assets, goods or services. Means you are purchasing goods and paying cash. You are purchasing assets and you pay cash. And third, whenever you are receiving or giving services. When you give services, you receive cash. And when you receive services, you pay cash. Then here there is exchange of cash. When there will be exchange of cash, only in 3 cases you will find that there is exchange of cash. One, you will find that whenever you are purchasing asset, you pay cash. When you are selling asset, you pay cash. When you are purchasing goods, you pay cash. When you are selling goods, you receive cash. And whenever services are given by us, we receive cash. And whenever services are given by others, we have to pay cash. Means in all these 3 cases, we consider exchange of cash and it is called as economic transaction. Means transaction, whenever it takes place, it can be of assets, it can be of goods or it can be of service. You are knowing the meaning of asset, you are knowing the meaning of goods, and service means you are going to employ laborers where you have to pay wages. Next is creation of relationship of debtor, creditor for assets, goods and services. Here we are talking about credit transactions. Those transactions where you have not paid money or you have not received money. Then in that case, debtor arises and relationship that is of creditor arises. Now if I give you one example, that I have purchased goods from Ashok of rupees 5,000. Here I have not paid money, only I have purchased goods and name of the person is given. Then in that case, it will be a credit transaction and I'll have to pay money to Ashok. Then Ashok will be considered as my creditor. Why? Because I have not paid cash to him. Same way, if I am selling any asset, if I sell furniture of rupees 5,000 to Mohan Furniture Mart. If I am selling furniture to Mohan Furniture Mart of rupees 5,000, I have not received cash. If I have not received cash, means it is a credit transaction. And when a person, that is Mohan, will have to pay me cash, then Mohan becomes our debtor. So creation of relationship of debtor creditor arises in case of assets, goods or even services. Sometimes it may happen that services of an employee manager is provided, but still we have to pay to him, or we have paid salary in advance to any employee and we have to receive services from him. Then here also there arises debtor creditor relationship. So here this, when we talk about economic transactions, then either it can be a cash transaction or it can be a credit transaction. But both cash and credit transaction will be recorded in the books. So here already it has been discussed that economic transaction again classified into cash transaction, credit transaction and other transaction. Not only that, it will be classified into internal and external transaction. At present, we have seen the meaning of economic transaction. It is always recorded in the books of accounts. 2 important aspects of economic transaction. And third important point to be noted is the core characteristic of economic transaction is its value in money. This important point of economic transaction is what? That the value of which can be measured in money. Means any transaction where you can measure the value in terms of money, you will call it as economic transaction. And third point, these economic transactions of business are recorded in the books of business. Very important point. If you find that any transaction is economic transaction, it will be recorded in the books. Now let us see the next one, that is cash transaction, credit transaction and other transaction. Now if you refer, what you will find, which transaction are called as cash transaction? Those transactions in which money is paid or received for the exchange of goods, assets or service. Means whenever you are purchasing any goods, assets or services are provided, then immediately cash is either paid or received. Means cash, exchange of cash is done. When I say exchange of cash, means either we pay cash or we receive cash for goods or services or assets. It is called as cash transaction. I purchased furniture of rupees 5,000 by paying cash. Then it is a cash transaction as money is paid immediately. I have sold goods of rupees 3,000 for cash or received cash by selling goods of rupees 3,000. Then your goods are sold and you are receiving cash immediately. So you will say that it is a cash transaction. Thus cash transaction can be of again three things. It can be of asset, goods or service. Now let us see the meaning of credit transaction. The meaning of credit transaction, that here one more point which I again forget, that if transactions are made through checks, that is by bank, it is also included in cash transaction. So when any transaction, if you find that you have paid by a check, by paying check you are purchasing goods, it is a cash transaction. Let us see the meaning of credit transaction. In this type of transaction, money is not paid immediately for purchase or sale transactions of asset, goods and services. Credit transaction means you are not paying cash or money for purchase or sale transactions of assets, goods and service. You will call it as credit transactions. Means amount of cash or money is to be paid in future. Immediately when you purchase goods, you don't pay cash. Sometimes it may happen that when you want something from a shop, you will say that tomorrow I'll pay you the money. Immediately you don't pay cash. Then you call it as a credit transaction. And always in credit transaction, already we have seen previously, relation of debtor, creditor comes into existence. Here also examples are given to you, that goods worth rupees 4,000 sold to Kalpana on credit. We are selling goods to Kalpana on credit. Then Kalpana becomes debtor of business. Means still we have to receive money from Kalpana. Now let us see the third one, that is other transaction. All transactions which are neither cash nor credit but are recorded in the books of accounts are known as other transactions. It means that other transactions neither falls in the category of cash transaction nor in the category of credit transactions. Means they are neither cash nor credit transactions, but they are recorded in the books. And they are known as special transactions. Other transactions are known as special transactions. Example, goods destroyed in accident or goods burnt by fire. When goods are burnt by fire, then we cannot call it as cash transaction because we are not paying cash, we are not receiving cash. And credit transaction means in future also we are not going to get money or we will pay money. So here what happens, such type of transaction where goods destroyed in accident, if goods are stolen, if goods are given for donation, if they are given for advertisement, or if you find certain asset turned defective, then you will term them as other transaction. Now the last one, economic transaction. Second type, we know it that from the viewpoint of internal and external transaction also it can be classified. You will have to identify whether it is an internal transaction or it is an external transaction. When can you call it as an internal transaction? Those transactions where there is no need of other parties, then those transactions are called as internal transactions. Means in this transaction you don't require other parties, but transaction will take place within business. Next, these transactions are recorded in the books of accounts. Very important. Though they are internal transactions, like other transactions, they are internal transactions but are recorded in the books of accounts. Let us see the examples of it. Depreciation on asset and loss due to natural calamity. Now when goods are destroyed due to accident or goods are stolen or goods are burned due to fire, they are all natural calamities. So it is a loss due to natural calamity. That also will be considered as internal transaction. Depreciation on asset means reduction in the value of asset due to its usage or any other reason. But these are all economic transactions, but they are also non-cash transactions. As we have seen for other transactions, internal transactions are also non-cash transactions. Now let us see external transactions. Means these transactions are between business and other parties. Here there is no need of other parties. Here the transactions are between business and other parties. This also are economic transactions. External transactions are also economic transactions of business. These are also recorded in the books. Same way external transactions are also recorded in the books of accounts. As we know it, all other transactions except internal will be considered as external transactions. Either it can be of goods, assets or services. Now I am going to share with you certain questions of which I have prepared this video, and those questions will be of 1 mark and you are going to write down in your classwork notebook for preparation of exams. Thank you.